Hey, Bulls and Bears, welcome to another economic financial news update. And your money, my money, our money, what's happening? Hope everyone's doing well. We got a lot of news to catch up on today. Today, we're going to look at some memes, have a little more fun than usual, but it's still a serious topic because this country and a lot of the globe is headed into some really tough financial times. But we do have to have fun a little bit here. Just think about the Titanic when the ship was going down. The band was still playing. The band was still doing their job. And that's what we're doing right here. We're going to go down with the ship with a smile and no fear. Even if I'm out in a field somewhere having to cook meals over a barrel, maybe with some old clothes in it that I had to set on fire to cook the food with, then that's where I'll be reporting to you from. Hopefully it won't be that bad. One of the backup plans that we have is to get either a motorhome or a travel trailer to use in case of an emergency where we have to evacuate, or if the economy plunges into a financial crisis and a job loss happens, and we don't have enough to make it very far with the emergency fund. That would be plan B, would be to live in a camper or a motorhome, and that's actually plan B is what a lot of people are already doing. I saw a video out of San Francisco in that area, Bay Area, and there was a whole bunch. It was probably at least a mile of a street with just motorhomes, campers parked up and down the street. And the residents were complaining because it was hard to pull out of their driveway. If you've ever pulled out of a driveway or a road and there's a big motorhome or something parked there, maybe a big rig, you can't see. You have to pull up and you have to lean forward, and hopefully a car's not coming. And sometimes you just have to dart out into the road without actually seeing. So those people were complaining that lived in that neighborhood. All right, but let's get into the financial economic news today. Thanks everybody again for being here. And this is a chart that I put out here recently, and this is falling rents. Now, if you look to the far right here, you'll see the last 4 months we've witnessed month-over-month rent declines. Now, that's typical during the fall season there. So starting in September, October, November, December, the rental market starts to cool off. Of course, it heats up big time in the summer. But if you look back over the previous 4 years, these are much bigger than the declines that we've seen over the past several years. Now, with rents declining, that must mean that vacancy rates are going up. We're going to look at that chart here in a minute. But the question is, where are these people going? If there's more vacancies now, more available rental homes and units, where are these people going? Are they moving back with their parents? Are people leaving the country? Are they leaving Earth? Are they, are they no longer amongst the living? Well, let's take a look at the vacancy rate, and let's bring up a chart right here. This is out of Apartment List, and as expected, we see the vacancy rate has increased. It was at a low of 4.1 in October 2021. Looks like August, October rose now to 5.9%. Still not a huge number for a vacancy rate. Remember, it reached 7.2% there in early 2020, but it is on the rise. So I think that tells a story. But look at what was going to happen here. We were headed a lot higher before the health crisis there in early 2020. All the protections that were put in place once that came about, that likely prevented the economy from falling further into danger zone. But now we're getting back to sort of reality as a lot of the protections have expired. There's still a lot of cities out there with protections. Look at California, look at Los Angeles, citywide protections also. And it's pretty weird. In some states, the city protections expired, but then you still have the state protections behind that. In other states, the state protections have expired, but certain cities are keeping the protections in place. So it's strange, it's weird all around. So you may not see falling rents in your area. It's going to depend on the city, the protections, and the local economy. But we are seeing 1, rising vacancies, and 2, falling rents nationwide. All right, let's move on to another topic here. And I just want to put this headline up here just so you people don't think I'm making this stuff up. I see some channels, they just talk, which is good. They get a lot of views. When you're not showing the evidence, I guess, when you're not showing the source, they can say anything. And I wanted to do this more, with the sharing of the screen and showing the sources, because I got a lot of emails. I shouldn't say a lot. I got I got a lot of emails total when I gave out my email a couple weeks ago, but I got several emails saying I was misinformation, that I was making this stuff up, that I was doom and gloom, that I was fear mongering. Things are not that bad because there's people in line at the amusement park, and I see people at the store with the carts full of stuff. People are shopping, everything's fine. Well, how are they buying these things? Well, look, most Americans turn to credit cards to cover basic expenses. So now 35% of households use credit cards to cover basic expenses. We're talking about just your food budget, paying your utilities. And would it be so bad if everyone was paying off their credit cards in full each month? It wouldn't be that bad, no. But that's not happening. People are not paying off their credit cards in full each month for the most part. Most people are going further and further and further into debt each month. Now you can sit there and say, okay, well, it doesn't matter because the credit card companies, they're going to extend endless credit. They're never going to cut back or reduce the credit line if people stop making their monthly payment, their minimum payment. And you could say too that it's okay because people will always be able to keep up with their monthly payment. Well, no, it gets to a point where your balance gets so high that even the minimum monthly payment, it'll catch up to you after a while. So it's not unlimited. It's not unlimited like the money supply, like the money they can create out of thin air when it comes to the household budget, to people's personal finances. We're talking about the average U.S. middle class person. There is a limit. And we're going to reach that limit for a lot of people here in 2023. We're not getting out of 2023 without something big happening. And I expect all these things to happen in 2023. Bankruptcy tsunami, vehicle repossession tsunami, foreclosure tsunami, eviction tsunami, that for the cities that don't have the protections, still in place, the city or the state. But nobody should worry, right? Because this guy right here, he's coming to save the market. So if that doesn't instill confidence in what's going to happen with the economy, then what will? So no, rate hikes, higher interest rates are not going to have us avoid the consequences of this entire economy not coming to a screeching halt, but definitely coming to a big slowdown. And it doesn't matter that the stock market took a big jump on Friday with a 700 increase in the Dow Jones. What matters is the middle class, the working person, and most of the people. And let's talk about the numbers behind that and what I mean by that. So first of all, I've cited this statistic before, this data, that 90% of stocks are owned by the top 10%. And the top 10% is actually not even mostly people, it's mostly institutions, hedge funds, trading firms, etc. But those people behind those companies are basically make up a lot of the top 10% of the population. And then, of course, you still have the billionaires in there, but the bottom 90% owns only about 10% of stocks. And of those bottom 90%, hardly any of them are getting rich by these increases in the stock market. I read that the average investor on Robinhood, the average person, not company, not institution, but just person, investor, the average balance in their trading account is $4,000. Right? So most of these people, even if the stock market doubled from when they got in, maybe they went from 4 to 8,000. It's not a life-changing thing for most of these people. But the top 10%, when their net worth doubles, when they saw the stock market double from the bottom, and I say that because the stock market essentially did double from the huge crash that we had in 2020 up to the highs that we saw, at the beginning of 2022, which is a year ago now. But to those people that rode, the bottom, that got in at the bottom, that rode it up to the top and basically doubled their money, going from 1 billion, and that's a billion with a B, to 2 billion. That's significant. But the average retail person going from 4,000 to 8,000 or 1,000 to 2,000, not life changing. So most people making money in the stock market, not making that much, one. And two, most people are not making money in the stock market because 90% of traders also fail. And there you have that number, 90% again. Long term, your odds are much better if you sit and hold. And ultimately, even after a big sell off or crash, ultimately the stock market recovers. Every crash we've seen, the stock market eventually recovered and went on to new highs. Also, what other forces are propping up the stock market and preventing the markets from completely collapsing? Well, that would be the Fed. Yes, the Fed has a trading desk. We've uncovered that many times here on this channel. They have something called a plunge protection team. I think most of you may know this, but some people still don't. I actually receive messages also saying that there's no such thing. But it's interesting that I still get those types of emails because they have came out and admitted that they have those operations. All right. But some people just don't want to research. They'll just hear it and they'll think, oh, that sounds unreal. That can't be true. Without even researching and then messaging me, telling me that I'm crazy, that I'm wrong, that I'm exaggerating. And they'll tell me stuff like, no, the regulators, they're watching that. The regulators they're not going to let that happen. Well, guess what? The regulators are in on it. The regulators are getting rich by failing to regulate like they should regulate. Right? It's a big game. It's a big Ponzi scheme. So I think most of us here know that. So I probably shouldn't spend so much time focusing on just the one or two negative messages that I receive, because 99.9% of you here know exactly what's happening um, in this economy and in this financial world. And that's one of the reasons why you see the top tier, the top 10% continue to get richer and richer and richer, because the entire game is tilted basically in their favor. When you have the regulators on your side, it's much easier to get rich. And also when you have access to billions with a B, billions of dollars of liquidity, it's very easy to make a profit in the markets. And when it comes to the little guy, the middle class, the retail investor, I read something that's pretty scary. A lot of people went ahead and took out credit card advances to jump into crypto investments, and we all know what happened. And actually, there's a pretty big channel here on this platform here on YouTube that basically was telling people to buy Bitcoin at 60,000, and it's a huge platform. I don't want to put anybody on blast, but that's the type of people that it seems like we're being promoted or whatnot. And talking about misinformation, people are worried about me. I wasn't telling people to go buy that asset when it ran up to that much. I've said the opposite. When an asset does this parabolic and goes up, don't try to chase it. I mean, maybe you'll get lucky and jump in and then get out right before the drop, near the top. But most people don't have that type of trading acumen, to be able to do that. All right, let's jump over into real estate and the housing market here to wrap this up. This one's out of Axios, and people are wondering why home prices are not coming down faster. Well, one, we have the GSEs, the government-sponsored entities out there backing huge mortgages now. They're backing mortgages of over $1 million. So the lending will continue to expand to more pricier homes. Even with that, prices are still coming down some. But here's something else that's happening. Home sellers are throwing money at buyers. Basically, it's concessions. And we saw this back in 2006, 2007, 2008, where sellers would help buyers by giving money back to them at closing to cover closing costs, even bigger amounts to cover closing costs and to buy furniture, to cover closing costs and do other things. And just sometimes it was big numbers too, 10, 20,000. But here's a nice chart that shows us how this has increased since sellers are having to find more ways to attract buyers. And this chart here takes us to the end of 2022, and we see it's a big increase up to 42%. So we're approaching where we were back, a couple years ago. And this goes back to early to mid 2020. Remember, initially in 2020, things slowed down. Things came to a screeching halt. If you would have bought a home or even a vehicle back right at the beginning of the shutdown, you would have been timing things very well. Most people didn't do that. Then we all know what happened after that. Prices exploded, inventory dropped. So folks, bottom line is there's still a lot of shenanigans going on to keep these markets from collapsing, to keep these markets from imploding. The housing market, the stock market, and even the broader economy. That's the way it is. But the expiration date is approaching, I promise you that, and we'll continue to see things get worse and worse as we go along. But if you're in the right position, if you're not behind the eight ball, and if you're prepared for what is ahead of us, this could actually be even a time where we could profit if you're able to keep a good credit score, if you're able to have some cash available when prices come down in certain categories, then that's going to be great and a good buying opportunity, and a great time to invest in the markets, maybe housing, depending on what you're into. The difficult thing, though, there's going to be other spots that are going to be so expensive. It's going to be more difficult for people to have cash or to put away cash or save cash because we have this energy cost going to continue to rise. There's basically a war on energy right now, especially what people call fossil fuels. And with the severe weather patterns and the farms having a lot of difficulties with the rising costs and the fertilizer costs, we're going to see the cost of food rising. Now, I did see the price of avocados came down. I noticed that here recently. Hopefully that'll continue or at least stay where they're at now. But I think we've got some rough times ahead here. It'll be very difficult to stack cash. But nonetheless, I always have to end up this video with the keep stacking. Bye for now. Big love. Talk to everybody soon. Come back for more news, financial updates here on this channel. Bye now.